Hello, thanks for tuning in. I'm Holly Shields here for Calcone Media, and welcome to another edition of Executive Corner Expert Talks. In this edition, we'll be shedding light on Kalima Energy, the standout Canada-focused oil and gas explorer and producer with two major assets in the Alberta region and more than 34,000 acres of Montney drilling rights. And joining us today to share their insights is CEO Jordan Cable. Jordan, thanks very much for joining me today.
Hi, Holly. Thank you for having me.
It's a pleasure to have you on the show. Now, first of all, WTI crude is hovering around 120 US per barrel. Where do you see oil prices heading in the short to medium term, and how do you think it will impact your operations?
We're very pleased where oil prices are right now and where they have been for the last number of months and couple of quarters. We're pretty bullish here on the price of oil. It all comes down to supply and demand, and there's a lot of moving parts around the world, as we all know. But I think the underlying theme is that there is going to be increased demand and supply is going to struggle. So I think in the short to medium term, we are going to be experiencing oil prices pretty close to where we're at right now. I'm not really predicting $150 oil, but I feel pretty good about it staying above $100 per barrel, and that's very good for us. We can make all kinds of money at $100 oil. A lot of our plays that we have in the Brooks and Thorsby area, they're economic down to about $40 WTI for a break even for drilling new wells. So as you can imagine, we're very happy with $80 oil even, but $100 oil is even better. And I'm quite optimistic that 100 is the current floor.
It's great to hear. It sounds like the oil prices are very much on your side there. So overall, great stuff. Now, Kalima's hydrocarbon production has increased quite a lot in 2022. Plus, you also have new wells in the Brooks asset area. How many wells is Kalima looking to drill this year?
We've been very active with the drill bit over the last little while. We're actually drilling right now as we speak in the Brooks area. We're right in the middle of a 4-well drilling program on our Brooks asset base, and we had previously drilled another 5 wells earlier in the year in the first quarter of this year on the Brooks asset base. So those 5 wells plus another 4 wells in the current program, and we have yet to finalize our Q4 program for 2022. But if oil price stays strong and with success on this current program, I think it's a strong possibility that we will add more wells in the fourth quarter of this year, either in our Brooks or Thorsby core areas, or maybe even a combination of both, pending oil prices. So very, very active with the drill bit to take advantage of these strong commodity prices.
That is certainly exciting, and great to see those new wells coming up. Now, speaking on boosting production, are there any plans to up your production beyond the 5,000 barrel of oil equivalent per day?
Yeah, we're currently producing around the 4,000 BOE per day mark, and we're going to be for the rest of this year in the mid fours on a per day basis. But with success in our current program, like I previously mentioned, and continued strong oil prices, if we were to add more wells for the fourth quarter, that's going to only increase our production. So I would say it's pending oil price strength and the success of the current program. But we will continue to grow production. We have to drill wells to replace our declines, but we drill enough wells to also grow production at a modest pace. So getting to 5,000 BOEs per day is not much of a stretch for us. So I could see that as something that we would aspire to achieve maybe closer to the end of this year or into the early part of next year.
Right. Sounds like it's on the horizon then for you around the near term. So that is good to see. And speaking on your dividend buyback program, your company recently announced plans to commence this share buyback program. How does Kalima plan to fund these programs?
Well, Kalima currently has a very strong balance sheet. We are approaching zero net debt as we in the next couple of month or two, notwithstanding our current drilling program. But we have a very strong balance sheet with little to no debt. We have very strong cash flows at current oil prices of well over $100 and the Canadian natural gas price of $6 to $7 per MCF. So our cash flow from our operations is more than enough to fund our drilling program, to provide production growth, our dividend program, as well as our share buyback program. So as we get closer to the end of the year, we can evaluate what to do with the excess cash flow after those items. And with the excess cash flow, we could consider increased returns to shareholders via more share buybacks or more dividends, or an increase to our capital program to drill more wells and start working our way towards that 5,000 BOE per day mark, or a combination of all of the above. With these commodity prices and the cash flow coming off of our production, we do have great flexibility to have the best of all worlds and have shareholder returns as well as some growth.
That is excellent to hear, certainly promising there. And now, speaking on share buyback, it does normally send the signal, as I'm sure you're aware, of a management's confidence in the company's operations and performance. Is that the case here?
Yes, absolutely. We have, as I mentioned, we have a very strong balance sheet. We have excellent prospects in both of our core areas of Brooks and Thorsby, where we have short paybacks on our wells. And with the continued strong commodity price environment, we do feel that our share price is undervalued. And because of that flexibility we have with our cash flow, we have the luxury of being in a position to buy back shares when we are trading at levels that we think is inappropriate in relation to the value of the business. So it's with that cash flow that we are enjoying right now that we have that flexibility to buy back shares, and we will continue to buy back shares if we feel that the price is inappropriate for the quality of business and the cash flows.
Well, that does make perfect sense there. Now, just to touch on your assets, you call Montney your sleeping giants. This asset has a considerable natural gas potential, and it does lie close to the existing infrastructure you have. So what are the near-term operational plans for Montney?
We're not currently performing any operations in the Montney as we speak. The Montney is a winter access only jurisdiction in Northeast British Columbia here in Canada. So the winter drilling season is over. So now it's just a quiet time up in that part of the world. But the luxury that we do have in the Montney is we have long tenure on our land position. The existing 34,000 acres in the Montney does have tenure until 2029. So we have the luxury of time. We are evaluating a number of different options for our Montney acreage, talking to a number of different entities that may result in a potential partnership or joint venture to get the assets developed, as well as some interest in a potential outright sale of the assets. But we do really like the Montney. It's a huge gas resource, and our preference would be to participate in the upside. With current strong gas prices of $6 to $7 Canadian. It's a great asset to have with that kind of gas in place, with that kind of long tenure on the asset. So we don't have to rush. We don't have to do anything operationally there in the immediate term, but we have the luxury of time on our side and looking for the right deal so that we can find a way to get those assets developed and take advantage of this high commodity price environment for gas prices.
That's excellent. It does sound like it's full of opportunity for you there. So that is great stuff. Particularly, you've got several years ahead when it comes to your tenure there. So all around promising. Now, any closing comments just regarding what we can look forward to seeing from Kalina Energy for the rest of the year?
Well, I think we've got a lot of exciting things on the go right now. We've announced our dividend that will be paid to shareholders in the third quarter of this year. We have been actively buying back shares in the company. We're currently drilling wells in Brooks right now as we speak, and commodity prices are high. So I think we've ticked all the boxes. So I'm very excited for the second half of this year, the production growth, the initiation of the dividend, And at the current share price of Kalima, we will continue to look to buy back more shares, and we think that's a good use of company funds for the shareholders as a way of providing returns to shareholders. So. And then I look forward to the addition of possibly some more drilling before the end of this year. With success in everything we're doing right now at these oil prices, I think that we would be in a position to add some more wells to our 2022 capital program. So I look forward to that when the time comes. And yeah, it's just a lot of good things going on at Kalima right now. So I'm very excited.
Certainly sounds that way, Jordan. You've got a big year ahead of you and lots of exciting developments on the horizon. So we'll definitely keep our eyes peeled for those. But with that said, thanks very much for joining us today here on Executive Corner Expert Talks. It's been really great to hear your insights.
Thank you, Holly. I appreciate your time today. It was nice to meet you.
Pleasure to have you on the show. Thanks for your time as well, viewers. If you've just joined us, that was Jordan Kebbell, CEO of Kalima Energy. And if you missed any part of that chat, you can catch the full interview on our YouTube channel here at Kalkine Media. I'm Holly Shields for Kalkine TV.